Hey there, I'm Alex Kluge from Toronto Home Experts, and I'm here to dive into the September 2020 real estate market update. For anyone that tuned into last month's video, knew that I was really excited to jump into the September 2020 numbers. Why is that? Well, September typically is the start of the fall real estate market. Summer's over, kids are back to school, and we usually see September as being really the start of what the next busiest phase of the real estate market, which is fall. Spring is usually the busiest in terms of volume and sales. Fall is always number two. So that's usually what happens is September is the start of that. So when we're looking at the numbers for July and August 2020, comparing them to 2019, you're not really comparing apples to oranges. But now for September, and the reason why I was so excited, I really wanted to see where we stood compared to last year, because that's going to signal where we're going in terms of the market heading into this fall and early 2021. Sales activity is a good barometer to know where we are in the market in terms of overall health. It's one of the metrics that we look at in conjunction with new listings and active listings, but it really says one part of the story. And September 2020 saw the busiest September that we've ever had, with over 11,000 sales. Unbelievable. So very active and a huge jump versus 2019. And certainly this was probably better than I was expecting if I were to create a prediction for where we were this month. But really, what's driving this? Like, why are we seeing a surge in sales? Well, I think it's two things. Firstly, ultra low mortgage rates, like 5-year fixed rate mortgages. We have never seen mortgage rates this low in the history of mortgages, right? So a lot of people are jumping on the opportunity to lock in at these rates and maybe upsize, maybe get a little bit more space, so that at these new mortgage rates, they're paying less than they would have under if they had a mortgage that they took out 2, 3, 4 years ago, right? So that's encouraging. So mortgage rates is one thing I think is driving the market. Number two is a shift in lifestyle. This work from home movement is here to stay. So a lot of our clients are calling us and say, "Hey, we need more space. We need an extra office. We need another bedroom. We need a flex space. We're both working from home, and we need more space." So we're seeing that as a huge driver in the sales, because realistically, I think work from home is going to be a big part moving forward. And so people are planning for the future. So that's what I think has been happening. And we've been seeing a lot of that in the numbers. And we'll dive into the specifics shortly, why that is. But those are the two summaries in terms of why I think we're seeing such a huge surge in sales and activity. Okay, so active listings, not surprising, they're up, right? Because when you see a surge in sales, you're expecting to have active listings also increase. Interesting, the increase in active listings versus sales is lower, which is showing us that we're having an appreciating real estate market, which we'll get to shortly, but that's what happens. So again, 18,000 is a solid number, and especially when you compare it to new listings, which is another barometer, right? Because when you see new listings and compare them to sales, you want to make sure that they're trending in the right direction. So 20,000 new listings, and compare that to sales. So new listings are up 30%, sales are up 40%. So again, we're trending in a positive direction vis-a-vis price increase. And you'll get to that slide next in terms of why that's happening. Okay, average price. So, based on what's happening with active listings and new listings and sales volume, we're expecting prices to go up. So where are they now for this month? Up 14% versus last year. Amazing. So you look at this on a blanket level, you're like, wow, the real estate market is going up 14%. It's actually not. So I want to dive into two metrics as to why that is. So yes, the real estate market in Toronto has appreciated and is appreciating. And I feel that the average price will probably be going up certainly the next 3 months as we head into 2021. Are we going to get to $1 million average price by the end of 2021? possibly. I think we're going to be close. So it'll be really interesting to follow that. So, certainly it's something we'll touch on in our subsequent videos. Okay, so up 14%. Does that mean the whole market is up 14%? It does not mean that, no. So why is that? So what I think is really driving this average price increase is that we looked at the sales mix. So sales mix, so condos, freehold, semi-detached, detached, townhouses. So what we're looking at is the mix of properties that have sold in 1 month versus another month. And what we saw for September 2020 is there a larger percentage of freehold, so detached, semi-detached houses versus September 2019. Those are typically more expensive or higher priced products compared to condos, which are priced lower. So that's naturally going to bring up the average price. So, don't take this at face value. That's why here at Toronto Home Experts, we dive into those numbers to understand what they really mean. So if you followed last month's video, we talked about house price index, which I think is a better metric for understanding what's happening with the house prices in Toronto. So I won't get into the details of what the HPI is because you'll probably read about it online. But really, it's a scientific approach at looking at what a similar basket of homes sells in 1 month versus a similar basket of homes selling in another month. So that's a truer reflection of what's happening. So how do we compare? So last month, interestingly, we had August was up as well, but the HPI, so the house price index for August 2020 compared to September 2020 is flat. So prices actually haven't changed since last month. But so again, that kind of coincides with what I just said about the freehold market really driving this market. Like we're seeing that it's really leading this market and not providing a true overall reflection of what's happening. So what's happening with condos? So downtown condos are getting a ton of press right now. So, and for good reason. So as I said last month, 50% of condo purchasers in a normal period, not now, are investors. So 50% are owners that are end users, so they live there and they enjoy the space. And the other 50% are investors. Well, investors aren't buying right now, especially in the downtown market. Outside of the core, it's a totally different story. But downtown right now, the rents are dropping. Rents are average on decrease from the peak, probably around 20%. And we're seeing a big jump in active lease listings. So I think that's really affecting what's happening with the resale market. So overall, it's interesting. Even though rents are falling, there's actually been more leases this year at this time than there were last year. Even though we have an increase in supply, like there's over 5,000 new lease listings in downtown core this past month, and you compare that to like a normal August or September, that number is closer to 2,000. So there's a huge spike in lease listings. So that's, it's interesting. So why am I talking about the lease market and the resale market when I'm talking about the condo market downtown? Because I think they're actually very much intertwined. So if we didn't see such a huge drop in rental prices, I don't think we would see that softening demand for condos in the downtown core. Now it's interesting because it's only really the downtown core that's seeing a softening of condo sales and price softening as well. Like when you go outside the core, it's very different. Like prices aren't dropping; they're essentially flat from where they were. Rents are basically the same. They might be a little bit lower depending on where you're looking at, but not 20%. So really, this is just isolated to the downtown core. So why the downtown core? Why is downtown condos so soft? Well, I think it's really twofold. We're not seeing that overall net migration moving to the downtown core as we do in normal years. Like there's essentially very little immigration that's happening to Canada due to the closed borders and the pandemic, which is to be expected. But once the borders open again and Canada welcomes the usual number of immigrants to the country, we're going to see a total change in this. So, there might be a buying opportunity actually in the next couple of months to get into the condo market before immigration opens up. Also too with that, there's typically 10,000 students that move into the downtown core each September for studies at University of Toronto, Ryerson, George Brown, and that's not happening. All these campuses are now working on a remote basis. So again, that's driving the market as well. So, interesting that that the condo market is lagging behind because it was so hot earlier this year into last year that it's really on pause. Like prices from the peak. Actually, if you look at prices where they were last year and you compare to where they are this year, they're still up, right? So it's not like the market is falling in that respect. But I think we're going to see a short-term dip in condo prices. Again, great opportunity possibly. But once we start looking into the new calendar in 2021, we'll start seeing more migration and possibly opening of campuses and so forth for jobs to really start moving back into a more normal, whatever you want to call it, basis moving forward. So, okay, so days on market. I know I talked along on the last one, but I'm not going to talk as long as this one. But days on market has decreased, not surprising, right? Because we're seeing such a robust activity in sales. And really, days on market, you want to look at the asset class. So whether that's a freehold or a condo or semi-detached, detached townhouse. Interestingly, days on market for freeholds is down. Days on market for downtown condos is up. Days on market for condos outside the core is essentially flat. So again, freeholds are driving the market right now. Okay, months of inventory. This is another one of my favorite stats. Months of inventory is below 2, unbelievably low, 1.7. So that shows it's very, very, very much a seller's market, especially when it comes to the freehold market. So again, we shouldn't be surprised because when you see sales volume goes up, average price goes up, we always expect the months of inventory to go down. So again, just what is months of inventory? Months is the number of homes that would, based on the absorption rate. So how many homes or condos are selling in a specific month, and compare that to the active number of listings, gives us the overall months of inventory. So we're seeing that, not surprising. I expect months of inventory to go up a little bit for October because that's usually what happens. But again, we'll see. But I think we're going to see a very healthy and active rest of 2020. Okay, so questions. We want to make sure that you hit us on YouTube. Post a comment below. We'd love to hear what you think. Any questions? Hit us on Instagram, like us on Facebook. We're always available for questions. We love interacting with our clients. And anyone who's really looking for additional information or finds this video helpful, we'd love to hear from you. Thank you so much for tuning in, and we'll see you again next month. Thanks so much.